Most Amazon sellers are losing between 15 to 30% of their profits right now, and they don't even know it. I know this because my agency has managed over $1 billion in Amazon lifetime revenue across 200 brands. And this is the pattern we see in almost every single account we audit. So I built an entire 10-step Amazon profitability course that you can access completely for free, together with a free profitability tool that finds exactly where your money is leaking. A full step-by-step guide and AI prompts that will help you implement it. In this video, I'm going to walk you through 10 steps that you can take to make your Amazon business profitable. The entire course, every tool and guide I'm showing you is completely for free, and you can download it in our school community. The first step is to run a parent profitability audit, where we're gonna take a couple of reports and to calculate the fees, the PPC, the returns, and everything on a parent and on child level. We'll start with 3 reports. The first one is child business report. To get it, you need to go into menu, reports, and then you need to download the detailed page and traffic by child item. Here we select the last month's period, which in my example is January, and then we click download. The second report is the FBA fee and transaction report, and we get it from payments, and then reports repositionary, and then date range transaction report. So we use the same period and we're gonna download it, and this is giving us a real Amazon fee and return related deductions. It should take about 1 minute and we can refresh, and then we can download the report. The third report is PPC performance from the campaign manager, sponsored products, and then the products tab, where we export the product level view for the same date range, which is the last month, including the spend, the sales, the clicks, cost per click, the ACoS, and so on. We'll be able to use this to look on a profitability on an ASIN level. Now we need to download all the reports into the profitability analysis tool that I created. I'll walk you through how to add each one of the reports into the tool. First, the business report. You need to go to Raw Business Report tab, File, Import, Upload, and drag your business report CSV. Set the import location to replace the current sheet, and then hit the import data. This gives the tool your revenue, your unit sessions, the conversion rate, buy box percentage. So a lot of information that we're gonna use it in the next steps. Next, the transaction report. Click the Raw Transactions tab. Same thing here. So File, Import, Upload, drag the transaction CSV and replace the current sheet import. Now this file has 7 info lines at the top, such as definitions, disclaimers. Just select the rows 1 to 7, right click and delete the row. So now your header row is the row number 1. Column A fills in automatically, so it looks up for each SKU and matches it to the right child ASIN using the SKU mapping tab. This gives you the tool your selling fees, the FBA fees, and any other transaction fees per ASIN. Just a quick note here, if you see any rows highlighted in yellow on the SKU mapping tab, those needs to have a manual ASIN entry. So just look up for the SKU in the manage inventory, type in the ASIN. It just takes about 2 minutes. Third is the PPC report. So click Raw PPC Products tab, then File, Import, and then Upload, and you can drag the PPC report in there. Similarly, you have to replace the current sheet and then import. Column A and B, they auto-extract the ASIN and the SKU from the product identifier format Amazon is using. And then the last piece is gonna be your cost of goods. So go to Raw COGS tab. All your ASINs are already listed here. Fill in 4 numbers per product. Unit cost, freight, duties, and then you can add the prep and packaging. The total cost of goods per unit is going to be calculated automatically. This is how we can get a good understanding about the account's profitability. Once everything is loaded, the dashboard is going to update automatically. The child dashboard shows every ASIN sorted by highest revenue. At the top, the KPI cards. So we have total revenue, units, conversion rate, PPC spend, ACoS, net profit, and then the net margin. Below that, every child ASIN with revenue, with fees, PPC spend and COGS, net profitability, TACoS, contribution margin, and so on. So a lot of metrics that are gonna help us to take informed decisions. The colors are telling you everything. So green means healthy, yellow means that you need to watch it, and red means that you need to take action immediately. If the ACoS is underlined in red, it is above your break even, and every PPC sale is losing you money. So you need to take action immediately for that. The status column gives you the decision. So scale means profitable. So we need to increase the budget. Hold means optimize first. Cut means fix it or kill it. So you need to take decisions if you can save that product or not. The parent dashboard is combining everything on a parent level. And this is very useful for us to take decisions for parents overall, especially when we have a lot of variations into a parent. Child count, combined revenue, combined profitability, and refund rate. We can see also an ACoS gap, and it shows you the weakest childs and the strongest childs for each one of the parents. Also, drop a comment down below if you ever actually checked your real profitability on Amazon. And if so, how did you do it? I'm curious to see. Internally, we use an automated version of this integrated into Merchant Spring. It pulls everything in real time, so if you want to use it and also to support the channel, you'll find an affiliate link into this description. Step 2 is to analyze the break-even ACoS. This is the maximum you can spend on a PPC before a sale becomes unprofitable. So the formula is simple. The break-even ACoS equals your contribution margin percentage. The break-even ACoS is telling you the maximum you can spend on a PPC before you start losing money on it. Now we look at the ACoS gap. If the number is negative in green, your PPC spend is within the safe zone. If it's positive in red, you're spending more on ads than the ASIN can afford it. For example, this ASIN is on red, which means we need to take action either to cut the spending or to take different types of optimizations for that ASIN. Any product showing you red here is bringing you money. You need to reduce your waste spend by reducing the bids, by improving your conversion rates for the listing, or pause the bidding campaigns. I will make a video soon on how to do this. And if you want to be notified about this, subscribe and click the bell button. Also, I'm gonna show you how we cut the waste spend in this PPC, and I also built an entire guide for you. So make sure you watch it till the end. Calculating the break-even ACoS can save you a lot of money, and most of the sellers will never calculate this. They just look only at the ACoS, which tells you nothing without knowing your margin. Step 3 is packaging tiers, and this is easy profit. Most people actually ignore it. Amazon charges you based on which size tier your product falls into. If your packaging is 1 centimeter over the boundary, you're paying the next tier on every single unit. So I'm opening the packaging optimizer tab, and this pulls the dimension and weight for every ASIN directly from the FBA fees tab. Then it looks up for every FBA tier boundary in a database that we built inside this tool. For each product, it calculates the next tier down, and it tells you exactly how many centimeters you need to shave it off. And also it color codes everything. Green means quick wins, and yellow means that you need to test it. Gray means that there are no savings available for that product. Let me show you a real example. So for this whey protein, 1 kilogram is currently in the standard parcel at £3.26 per unit. The tool says that we need to cut only 1 centimeter to go into a small parcel tier size, so we can reduce the cost for the FBA for £3.05. That is 20 pence saved per unit. At 167 units a month, this is £35 a month from one packaging tweak. Taking in consideration that these changes remain for a long time, even though you save £20 or £30 per month, that's going to compound for the entire period you're selling this product. Now, look at this product, the electrolyte sachet. Currently in large envelope, the tool says it can drop to a standard envelope by trimming half a centimeter off the height. That saves 62 pence per unit. At 103 units a month, that is £64 a month from half a centimeter. So that's not bad. If you scroll up, you can actually see the overall savings across the actionable products. It's around £300. So remember, this is per month. So we're looking at over £3,000 per year if you implement these changes, which many times there are small and fast changes to do. And where it says no savings available, that means the next year actually is not gonna save you any money, so there's no point in trying to change that. Now, once you know which product to fix, here is how to actually get Amazon to update the tier. You have two options. Option 1 is to update the packaging and send a new inventory. Amazon will measure it in the fulfillment centers, and the tier is probably going to update automatically. However, if it doesn't, you can apply for a QB scan. So you need to open the Seller Central, and you can go to Get Help and Resources. Then under Common Issues, select FBA products, weights, and dimensions. Choose Remeasure and Reimburse. Enter the ASIN and also the sub. Choose Remeasure and Reimburse, and also enter the ASIN and press submit. Amazon will QB scan the product and they will update the fee if the dimensions are wrong. Either way, take the photos from the packaging with a tape measure before you submit. If they reject it, just upload the images in the case and escalate it. Once the new images and dimensions are live, update the FBA fees tab with the tool and the dashboard recalculates your margin and break-even ACoS instantly. Step 4 is landing cost reduction. Most of the sellers negotiate on unit price alone, and this is a mistake. What matters is the total landed cost. What matters is the total landed cost, which is the unit price plus the freight per unit plus the duties, prep, and packaging. This step has a lot of depth to it, so let me show you the full process. There are 3 phases: research, negotiate, and track. Let me walk you through each one of them. Phase 1 is research. First, baseline your current costs. Open the COGS tab and document exactly what you're paying now. Supplier costs, shipping per unit, duty rates, and any prep or labeling fees. You can't really negotiate if you don't know your exact numbers. Then go and research what the market is actually charging for it. Search on Alibaba, Global Resources, and 1688, which is a domestic Chinese wholesale platform. The equivalent of Alibaba, but people in China use it for their domestic purchases. What's interesting is that the prices are very often between 20 and 40% cheaper than what we see on Alibaba, because they're seeing the real factory prices rather than prices with a slight markup. The entire website is in Chinese, however you can translate the website using a Google Translate or any other translation tool. Now the next step would be to find the suppliers for the products that you're selling and just send a couple of requests for quotations. I would recommend asking for about 3 requests. It's very important to request the same information, the same specification. It's very important to ask for quotations for the same specifications, for the same dimensions, same packaging, and so on. Also, it would be good to ask for different MOQs, for different prices, estimated freight to your ports, important information that's making your transit faster. Here is what a message looks like. Hi, we sell this product on Amazon UK and US, doing X amount of units per month. Can you quote unit price at 500 and 1000, MAQ, FOB price, estimated freight, and payment terms? Just keep it specific. The more detail you give, the more competitive the quote is going to be. When the quote is coming back, do not just compare the unit price. I think it's important to build an overall landed cost matrix because that's going to give you the full picture on your costs. Look at this example. Supplier A is $320 per unit, but $180 freight. That's $5 landing. Supplier B is $350 per unit, but only 90 cents freight. Phase 2 is negotiation. So you can go back to your current supplier with the quotes that you received, and you can mention that you received a couple of quotes from other factories at the landed cost, and you can mention that you like working with them if that's the case, and if they can help by matching the quote that you received from the other suppliers. The reality is most of the suppliers are going to move 10 to 15% from what they're charging you just to maintain the relationship that you have with them. Also, there are other angles. So if the unit price cannot move, you can ask other benefits such as to absorb the part of the freight or to reduce the MOQ for the next order. Also to send you 60-day payment terms or 90 days. There are a couple of things that you can do to make your cash flow better. Here is something that most of the people never thought about it. If you already have stock that was overpriced based on what you know the market rate is, ask your supplier for a credit note on the last order. So you can say this: I have found the market rate and it's lower. I want to keep our relationship going. Can you credit me the difference on my next invoice? You'd be surprised how many people say yes, especially if you're a consistent customer with them and if you already have a good relationship with the supplier. Also, another thing that you can do is to check your HS code and duty rate. So you can go to UK Trade Tariff site or the US HTS database and look up for your product. If your freight forwarder classified it under the wrong code, correcting it can save you 2 to 5% on the duty rate. So that's quite a good amount. Also, you can get quotes from other freight forwarders to reduce your shipping costs. Phase 3 is to track everything. So update the COGS tab with the winning numbers. The dashboard recalculates your margin and the break-even ACoS instantly. On a product doing 500 units a month, even a £1 reduction in landing cost is about £6,000 a year. So that's a good amount of money. What I suggest is that you repeat this process every 90 days, so you're always getting the best price out of all your partners. Now, I know this step has a lot of moving parts, so I created a full landed cost reduction playbook for you. It has all the outreach templates, the exact negotiation scripts that you just saw, the AI prompts you can use to research suppliers and compare the costs, and the work example showing how to build the landing cost matrix. You can download it for free in the school community. Link is in the description. By the way, if you already fulfilled the first steps and you can see the savings, let me know in the comments which step had the biggest impact for you. That helps other sellers know where to start. Step 5 is to look at every fee and try to optimize it. Amazon charges dozens of different fees. Amazon charges dozens of different fee types, and most of the sellers never audit them. Some of these fees are completely avoidable. You're just paying them because it's very hard to see them and nobody told you that they exist. The tool has a fee analysis tab that automatically totals your selling fees, the FBA fees, and any other fees from the transaction report. You can see an overview of the fees, and in this example, the total fees for the month are over £12,000. That's a big amount of fees. Below that is a classification table. Each fee type is labeled as avoidable, unavoidable, or partially avoidable. The avoidable ones are highlighted in red, and those are the targets that we want to improve. Most sellers have no idea they're paying for half of this. Let me walk you through each one of them. First, the age inventory. If your stock sits in Amazon for more than 180 days, you start getting extra charged. And it's escalating longer it sits. So the more days it's gonna sit in Amazon, the more you're gonna pay. The fix is simple. You can go to inventory planning, and then inventory age. And you can sort by days in the warehouse. Anything approaching the 150 days, either run a deal or run a couple of PPC campaigns, or you can create a removal order if there are too many products in there. But I strongly suggest that you try to sell them as much as possible, because there are gonna be some organic benefits coming to your end. The second one is the low inventory level fee. This one is catching people on the other way. If your stock drops below the 28 days of supply, Amazon is charging you on every unit sold. This is a new fee, and it has been quite controversial. You can check the FBA dashboard, and if there are any ASIN flags, you can create an inbound shipment immediately. The sweet spot is to be between 30 and 90 days of stock in FBA of all times. Yeah, so it looks like if you have too much stock, it's not really good. And also, if you don't have enough stock, Amazon is gonna charge you for that as well. That's why it's very important that we forecast properly the stock management, that we do all these actions to improve the profitability. The third fee is the inbound defect fees. This is a big one for 2026. Amazon has discontinued their prep and labeling services, and if your shipment arrives with wrong labels or the wrong destination or non-compliant packaging, you can now get charged with 60 cents per unit. This can be a big cost if you're selling thousands of units per month. To check this, you can go to shipments, performance dashboard, and you can check if there are any recent shipments that have been flagged. If there were, you can fix the root cause with your prep centers or supplier before the next shipment. The fourth is the inbound placement service fee. When you send inventory to just one of the fulfillment centers, Amazon is going to charge you to distribute it to the other fulfillment centers. If you split your shipment to 4 or more warehouses, Amazon is going to waive this fee for you. I think the rule of thumb here, if the shipment is under $500, just pay the placement fee. And if it's over $500, you can start looking into the pallet sizes and splitting up yourself. For example, this account was paying over £300 in FBA label services fees, and Amazon was labeling the products for them. The fix was to switch to self-labeling, especially because Amazon removed this service. Now we can look at partially avoidable fees. These are the fees that you can't really eliminate, but you can reduce them. The FBA fulfillment fees, for example, you cannot remove them, but you can reduce them by optimizing your packaging to drop a size tier, and we covered that in the step 3. And the returns processing fees. So Amazon now only charges this if your return rate exceeds your category threshold. You might have seen that badge or on the listing when it has more returns than usual. So the fix is reducing your return rate through better listings and quality control, which we'll cover in the step 6 and 7. You can enter your monthly estimated savings for each fee you plan to fix. So the total is gonna sum how much money you saved in fees for this month. Prioritize the top 3 avoidable fees by the savings amount, so you can fix those first. So if you're running short on time, this is usually about 80% of the fees overall. And also just a quick note, Amazon updates their fee structure at least twice a year, usually January and June. So every time they do this, come back to this tab and re-audit it. New fees appear and also they change very quickly. This year brought some of the biggest changes we have seen, especially around the inbound defect fees and also the removal of the prep services. Now, I know this is a lot to remember, so I created a full fee leakage SOP for you. It covers every single Amazon fee type, partially avoidable or unavoidable. For each one, it has the exact Seller Central navigation path, so you know exactly where to go, a step-by-step fixed procedure, the fee ranges so you know how much you could be losing, and the AI prompts that you can use to automate this process. There is also monthly audit process, which has 10 steps. I think it takes about 1 hour to do them, and it typically covers 500 to 5,000 pounds in avoidable fees. I think that's quite a lot for an account. The profitability tool, the FBA tier database, the landed cost negotiation script, and also the fee leakage SOP. So all of it, you can get them in the links down below. You can grab them now and also follow along because the next 5 steps are where the real savings show up. Step 6 is the refund recovery. Returns are eating your margin twice. You lose the sale and you often eat the return shipping and the restocking costs. So a lot of costs are involved into this. But here is what most of the sellers are missing. A lot of the returns are preventable, and there are at least 5 ways to recover the money from the returns that most sellers never use it. So I'm gonna walk you through each one of the ways inside the Seller Central so you can do this by yourself today. First, let's get the data. Go to Seller Central and return reports. Set the date range for the same period you used for all the other reports. So in my case is the last month, which is January. You can wait a minute and click refresh. When it's ready, you can click download in TSV. This gives you every return by ASIN and it includes the reasons that the customers gave. Now upload it in the tool. Go to the raw returns tab, file, and then import, and then upload. And you can drag this CSV and replace the current sheet. And after that, we can click import. Once we have the data, the dashboard is going to show us the information. So you can go to the chart dashboard and you can look for the refund rate column. Green means under 3% and you're fine. Yellow means between 3 and 8%. So that's an area where you should keep an eye on it, maybe to investigate more. And also the red means the returns are over 8%. Something to note here, different categories have different averages for the returns. So for example, the clothes return rate is much higher compared to other items. So from what I know, it's over 20%. If you're above 8% on any of these ASINs, the product is bleeding your money. So every return is destroying your margin. Now, let's sort the return report by reason. We can go back to the raw returns tab and sort the column by return reason. You'll see a couple of patterns immediately. You can audit the ASINs with the high returns. You can group them by the reason and you can count them. Top 3 reasons by volume, and also you can create a priority level for it. Now, let me show you an example on how I would fix the return rate for an ASIN. So let's say this product had over 8% return rate. When analyzing the voice of the customers, the number one reason was that the product is not as described in the listing. So when we look at the listing, the main image makes the product look very small and it's hard to understand the real size. Also, the size is at the end of the title and there are no sizes in the main image. Also, the product images do not show any usage recommendations. So it's very likely the people to not know how to use it, and also the results of the product are very hard to get when people don't know how to use it correctly. Another big issue that I spotted is that on the product images, we can see a different product, probably from a different variation. So this is very confusing for the customers when they purchase. Also, the issues continue while we scroll down the listing to the A+ content. So to solve this, we'd have to recreate the main image, to update the title, the bullet points, the premium A+ content. So we'll have to provide proper information for the customers to take the right decisions. I can show you quickly how to do this in Sellona.ai. So if you don't have an account already, you can sign up and you can try it for free. I will go ahead and create the brand for this product by adding the brand name, also the logo. I don't have the logo for this brand, so I'm simply gonna take a screenshot of the product and I'm gonna add it there. Now, one of the most important part is to select the colors for the brand. This is gonna determine the quality of the images that we're gonna get. Next, we go to products and we're gonna add the product. We're gonna paste the link and then we click import product. It will take about 1 minute for the product to import. Next, we click generate and we can choose to create a main image and also to use the hyper model. It will take about 2 minutes for the images to generate. We can see the Seluna generated 3 versions for the main image. We can choose the one we think it will work the most. For example, the second one seems to be the most likely to attract more clicks. If we want to edit this image, we can click the edit image button and we can choose the feedback that we want to do. We can choose just this image and we can add the instructions. Let's say update the text on the label to be deep conditioner, 1.35 ounces, 40 milliliters. This is gonna help the customers see directly from the main image what is the size. You can also create new product images that will be with this product by going into products, clicking the generate button, and you can select any workflow from there. So for example, Amazon product images. This is how you can audit your listings to improve your refund rate. Now let me show you the 5 recovery techniques. This is where you get your money back. I created the refund recovery playbook that you can download it for free in the school community down below. Number 1 is the FBA reimbursement claims. This is free money most sellers leave on the table. When a customer returns a product, Amazon is supposed to either restock it or to reimburse you. But sometimes they receive the return and never do either of them. The item just disappears. Here's how to check it. You can go to reports, then to fulfillment, and then the FBA customer returns. You can download this report for the last 90 days. Now open a second report, go to reports, payments, and then reimbursements. Download this one for the same time period. What you're looking for is returns that were received by Amazon more than 45 days ago, or there is no matching reimbursement and the item was not restocked. Sort the returns report by return rate, oldest first. Look at anything older than 45 days. Then research for that order ID in the reimbursement report. If it is not there, Amazon owes you money. So now you can open a case. Click the question mark icon in the top right, then get support, then selling to Amazon, and then fulfillment by Amazon, then the FBA issue, and then customer returns. You can paste the order ID and say the item was received on this day but was not restocked or reimbursed within the 45 days. Please investigate and issue the appropriate reimbursement. You can batch this. You can put 5 to 10 order IDs into one case. Amazon can process multiple into a single ticket. We find unclaimed reimbursements on almost every single account we audit, sometimes hundreds, sometimes thousands of dollars. So I encourage you to set a monthly reminder so you can check this every month. While we are in the reports, also check for 2 other types. Go to reports, fulfillment, inventory adjustments, and filter for lost and damaged. These are items lost or damaged in their warehouse. They owe you for this same process. You can open a case. The number 2 is the FBA grade and resell. This is how you let Amazon to sell your products that have been previously returned by the customers. When a product gets returned, Amazon usually marks it as unfulfillable, even if it's in perfectly fine condition. So it just sees their configured storage fees. Grade and resell program lets Amazon inspect the item and is going to grade the condition for it and is going to release it as used in your behalf. You stay as the seller and also you control the price. Just one thing to note here, sometimes Amazon doesn't really do a very good job in choosing if the product is good or not. So if people buy it as used but it's very bad and it's in a very bad condition, they might give you 1 or 2 star reviews. So you might want to be mindful of that. Here is how to set it up. You can go to settings in the top right and you can click the fulfillment by Amazon. Scroll down to the automated unfulfillable settings and then click edit. Select enable, then choose grade and resell as the preferred action. Now set your pricing. For each condition tier, you choose a discount off your new price. I recommend like new to have a 10 to 15% off, very good to have a 20 to 25% off, and good a 30 to 35% off, and acceptable a 40 to 45% off. Then you can choose which one of the ASINs you can include into this. You can enroll up to 2,000 ASINs, so plenty of space there. Start with your highest volume or the highest return rate. Those will generate the most recovery for you. After that, you can click Save. From now on, when a customer returns one of your products, Amazon will automatically inspect it and grade it, and after that release it rather than mark it as unfulfillable. According to Amazon, sellers recover up to 8% of the original product value using this program. Even at 40 to 60%, it is far better than paying the removal fees for getting nothing. Number 3 is supplier defect claims. If the customers are returning your product as defective, that's your supplier problem and they should be paying for it. So you can go back to your return report and you can filter by reason defective, count the total defective units, and you can now calculate the cost per unit. This is your product cost plus the FBA fee you already paid plus the return processing fee. So you can multiply this by the total units. This is what your supplier owes you. So you can now send this to your supplier, attach the Amazon return report as proof, say we received X returns for defective products as a total cost of X amount of dollars. We need a credit note or replacement units on the next order. Most suppliers will agree with this, especially if you attach the evidence and you are a regular customer. They know if they don't fix this, they are very likely to lose you as a customer. Also, going forward, you can add a QC clause to your purchase order. Defect rate above 2% entitles you to a credit note for all the defective units, plus associated Amazon fees. Get it in writing before the next order. It would be good to get it in writing for the next order. Another best practice would be to consider a third-party inspection service before you ship your products from your manufacturer. This can save you a lot of money if some of the items are faulty. Number 4 is Amazon outlet liquidation. Go to manage inventory, filter by unfulfillable, select the items and choose create liquidation order. Amazon sells them at a wholesale discount and you get the net proceeds. Amazon sells them at a wholesale discount for you. Second option is a removal order. Select the items and choose create removal order and have them shipped back to you or to your prep center, then sell them on eBay, on your website, or even to wholesale. The decision is simple. If the liquidation recovery amount is more than the removal fee, if the liquidation recovery amount is more than the removal fee, just liquidate it. If you can sell it for more yourself or another channel, remove it. If it's completely unsellable, you can dispose it so you can stop paying storage fees. Number 5, this only applies if you sell any products fulfilled by merchant. Amazon allows you to charge a restocking fee on certain FBA returns. So if the item comes back to you used or damaged, you can deduct up to 50%. If it comes back outside of the 30-day window, up to 20%. To do that, you can go to settings, to return settings, and update your restocking fee rules. Most sellers have this on default, which means 0 restocking fees. You are absorbing at the moment the full cost of every return for no reason. Those are 5 techniques. Let me show you one more thing that will prevent returns from happening in the first place. I built an AI prompt that takes your return data and your listing content and it generates a specific plan for you. Here is how it works. Take your top returns reasons and volumes from the return report, then copy your title, your bullet points, and describe your images. Paste it in Claude or ChatGPT with this prompt. This prompt tells the AI to cross-reference every return reason against your listing and output a table. For each reason, it gives you the root cause, which listing element to fix. So it's gonna give you an audit and it's gonna give you an entire audit on how to fix your listing. It even rewrites your title and the bullet points and it's gonna address the top 3 reasons for you. We've implemented this for our clients and we've seen the returns dropping consistently. Also, you can track the refund rate column in the dashboard. If the fixes work, you'll see it in 30 to 60 days. I created a full refund recovery playbook that covers all 5 techniques with the step-by-step instructions, the reimbursement case template, the supplier claim template, the QC clause for your purchase order, the AI prompts, and the returns reasons so you can fix your listing. It also have a monthly audit checklist, 10 steps that you can take in 60 minutes, and it typically recovers 500 to 5,000 pounds, and it can save you a lot of money. You can download all of them in the school community in the link down below. We run all these audits and the refund recovery for our clients. So if you'd like to work with our agency, you can book a call down below using the link in the description. The step 7 is the voice of the customers to conversion mapping. I'm going to show you how to take your actual customer complaints and to turn them into listing fixes that are going to increase your conversion. Let me show you how it looks like on a real account. Let me walk you through this. So in the menu, we can go to performance and then voice of the customer. And right away at the top, you can get the CX health breakdown on all of your listings. This is a color-coded summary. You can see we have 130 listings rated as excellent, 3 rated as good, and then down here we have 4 rated as very poor. Now we can look at this and we can say that we have 130 listings which are doing excellent. However, those 4 very poor listings are the ones that are costing us the most money. So I'm going to click and see what are the reasons for it. And now we can see the listings with the problems. Each row shows you an ASIN and the NCX rate, the number of negative customer experience orders versus the total orders, the top NCX reasons, and also the CX health rating. I know there are a lot of namings here, so let's keep it a bit simple. I'm going to walk you through what we're seeing. The first product has a 25% NCX rate. That means 1 of 4 customers reported this product and they returned the product. If you look at the top NCX column, it says defective item at 100%. Now, there is something important to notice here. The fulfilled by column says merchant on all 4 of them. Those are not FBA products, so they are fulfilled by us. The defective complaints could be a product issue, a packaging issue, or a shipping issue. So we need to dig deeper to understand the situation. I click on the see details on the first product, and this is where Amazon gives you the actual customer feedback. It shows you what customers reported, the return reasons, and even specific comments. So now when you know exactly what the problem is, the question is, what do you do about it? And there are 2 types of fixes: operational fixes and listing fixes. Most sellers only do operational ones. So I encourage you to take action in both directions. So what I do is to take all the complaints from the voice of the customer dashboard and also from the return report that we pulled in the step 6 and from the 1-star and 2-star reviews. I drop them all in the spreadsheet and I'm start building a listing optimization plan for them. If the majority of complaints are about quality and defects, like we're seeing here, this is telling us this is either a product or a packaging that needs to be fixed. And also we need to polish the listing to give a good understanding of what the product is. So for our product here, where the top reason is defective item, the listing fixes are about building trust and settling expectations. First, add an infographic showing the packaging process, how the product is being packed and what materials are being used, and also how the product is being sealed. Second, what I can do is to add in the A+ content a quality assurance model. This is where you show any certifications, any standards, any quality control steps, so anything that can build trust about the product. Third, I can update the bullet points to include specific quality claims, things like built to industrial standards, reinforced at stress points, so technical things that are gonna make sense for the customer. And fourth, if you have brand registry, you can go to the A+ content manager and you can select the ASIN and you can add the comparison chart and you can add the comparison chart module to show your product versus a generic alternative. On the operational side for these merchant fulfilled products, I would check 3 things. One is packaging. Can it manage the transit period? Is it too soft? Can it be reinforced at the corners? So different things like that. Also a product quality check. Are we inspecting before dispatch? And also the shipping method. Are you using the right services for the items? So sometimes the items are fragile and we need to use different services for them. So after each implementation, what I suggest is that we wait about 30 days. We look again next month for the data to see if we made any improvements, so we can be very proactive with the optimizations. This was the voice of the customers mapping. We do this constantly for our clients to ensure that they have a good return rate. Step 8 is reduce the PPC waste spend. Now, this is a big one, and I actually put together a full guide because there is a lot to cover. Let me walk you through the system on how we use it. So this is the PPC waste reduction playbook. You can download it for free as well in the school community. This system gives you a complete system for finding where your ad money is being wasted. The first thing in the guide is how you pull your search term report. This is a report that shows you every single search term that triggered your ads, what you spent on each one of them, how many clicks, how many orders what ACoS you've got, so it tells you exactly where your money is being spent. Then it walks you through a couple of key columns and what each one of them means, because most of the sellers download this report, they just look at it and they don't really have a good idea what to do with it. Now, the core of the guide is the 5-category classification system, and this is what makes it really simple. Every search term in your report goes into one of these 5 buckets, and each one of the buckets has a clear action. Bucket 1 is waste, any term money with 0 orders. Bucket 2 is bleeders. Here we have orders, but the ACoS is too high, so you're losing money on every sale. The third bucket is break even. You're not losing money, but you're not making money either. Bucket 4 is winners. Here you have low ACoS, multiple orders. This actually makes you money. And the last bucket is low data. You don't really have enough clicks yet to know, so you leave it alone and check for the next month. The guide then gives you a step-by-step instructions for each one of the phases. The phase 1 will be killing the waste. It shows you exactly how to sort the report, for the waste terms, to negate them in bulk. There is even a tip on how to negate multiple search terms so you don't have to do it manually. Phase 2 is cutting the bleeders, and what I really like about this section is the deciding metrics. It tells you if the ACoS is a bit above your break even, lower the bid by 20 to 30%. If it is way above, just negate it. Really clear rules so you're not guessing. The phase 3 is isolating the winners. This is where you take the search terms that are actually making you money and move them into their own exact match campaigns. The guide walks you through creating the campaigns, setting up the bids, and this is the thing where people always forget, negating those winners in the original campaigns so you do not end up bidding against yourself. Then there is a whole section on TACoS. This is telling you how much of your business depends on the ads. The guide has a health scale. Below 10% is great. 10 to 50%, it means you need to keep an eye on it. Above 15, you are too reliant on ad, and it explains how to bring it down over time. There is also a section on the common waste patterns we see across the 200 plus brands that we're managing. Things like your ads are showing up to the competitor, things like your ads are showing up on the competitor brand names, or generic search terms that get a lot of clicks but they're not very relevant. Also, there is a saving calculator where you can see the actual impact. And the last thing in the guide is an AI prompt. You can paste your search term report into Claude or ChatGPT, and it's going to classify every single search term into the 5 buckets automatically. It tells you your total waste, it gives you the top winners to promote, and spots patterns you might miss. So you can actually automate this process quite easily. And if you don't want to do this yourself, or you want a professional eye on it, our team can actually do an entire full PPC audit for you. We'll go through every campaign, every search term, exactly where your waste spend is, and we'll give you a plan on how to fix it. You can book a discovery call with us and we'll be very happy to help you. Step 9 is tracking the external traffic, and most of the sales are actually ignoring this. If you're running Google ads, TikTok influencers, or email campaigns, and you're sending traffic to your Amazon listings, you need to know 2 of these things. 1, is that traffic actually converting into profitable sales? And 2, are you collecting the brand referral bonus on every sale it generates? Because Amazon will give you roughly 10% of the sales back as credit into the referral fees, but only if you tag the traffic correctly. So here is how to set it up. In Seller Central, go to brand, then brand referral bonus, and click enroll. Once you are enrolled, go to Amazon attribution under the advertising menu. This is where you create your tracking tag. Click create new tag, select the products you want to track, and choose the traffic source, such as Google, Facebook, TikTok, email, so whatever you want to run. It's going to generate a unique URL, and you can use that URL to add it into your ads, your email link, your influencer bio, so whatever the click happens. Now, every sale from that link gets tracked, and Amazon credits you roughly 10% back on the referral fee. On a 15% referral fee, that drops to about 5%. In this way, you can invest in your organic social media traffic, you can invest into paid ads, into Google ads, Meta ads, and so on. So it's a great way to get some money back from Amazon. The final step is the monthly review. If you have done all these 9 steps, you have built the dashboard, you have cut all the costs, you fixed your fees and you recovered your refunds, you improved your listings and you cleaned up your PPC. Now the question is, what do you do next? How do you keep improving? This is what this step is about. This is exactly what we do every month for our clients at the agency, and the reason their numbers keep getting better. So at at the start of every month, the first thing we do is to pull the same reports again. You can go into each tab in the tool and update with the refresh data. And now the important part is all the work that we've done last month actually made a difference. So you make a comparison from the last month with this month so you can take informed decisions going forward. And what you can do is to go through each one of the 9 steps that you've done and compare them with the previous month. For example, did your landed cost come down from the step 4? Were the fees reduced in the step 5? Did you manage to refund any money from the step 6? So basically tracking every step that you've done in the previous month by comparing the previous month with the month that we have right now. So that is the last step. You can pull the reports, you can update the tool, you can check if the last month work paid off, and you can find what needs to be fixed next. Also, you can take action for the next month. This is the entire 10-step Amazon profitability course. So if you manage to get to this point, you're a winner. I have put a full course inside my free school community where you can find the profitability tool and also all the step-by-step guides that I presented you in this video. Also, if you want to see your listings generating more clicks, getting a better conversion rate, you can try Seluna for free. I left you the link in the description too. And if you want my team to run this entire system for you, my team is always happy to help. So you can book a call with us and we can have a discussion about it. Subscribe if you want to see more systems like this. I have a lot of great videos coming forward. So if you have a specific topic that you would like me to cover, comment down below. Until then, see you in the next one.